By this clock, it's 5:37. So if I could have a motion to approve the minutes from March 16th.
Move. Second.
Move it in second. Anyone have any comments, additions, corrections? All in favor?
Aye.
Any opposed? Very good. So we have no appointments tonight. We do have a presentation on the end of year closeout by Mary Beth Leeson and Lynn Marinelli. I believe they're on one line here.
I'm here.
So, come on, now, are we doing your slides? What we are? Okay, very good.
Yeah.
Thanks. So the
And
floor is yours.
I think Lynn was gonna go first, if I'm not mistaken. Talk about the year-end performance.
Is Lynn online? Lynn, if you're here, you're on.
She's just now getting on. It's connecting.
Okay.
Wait a moment then for Lynn.
We live streaming, Mr. Chair.
I would assume we are.
I'm getting reports that
We're not.
are we live streaming?
Yep.
Okay.
Lynn, they were ready for you to go ahead and start presenting whenever.
Hello, I'm sorry, Amanda, did you say I should go ahead?
Yep, go ahead, Lynn.
Okay, just 1 second. Okay, so can you see the spreadsheets on your screen?
Yes. Well, we can in changes.
Yes, Lynn, I'm sharing my screen now. You just have to let me know which Excel spreadsheet you'd like up at what time.
So Lynn, right now, the year-end performance for the A fund is up.
I do see it. I'm just looking to try and find the volume on my screen here. Okay, Amanda, could you click on that tab at the bottom that says the DM fund? We'll start kind of with the easiest to the hardest, I think. So the DM fund, we have projected using a fund balance of $177,000. And we ended up using a fund balance of about $135,000. So the performance was a little better than anticipated. And mainly, we put on the sheet here, there were some revenues that were quite short. Some of them were for other agencies. And that's mainly because they obviously didn't have the need for gasoline or fuel purchases from the county. So we have corresponding lower expenditures down below that goes with those. And then we also had the reimbursement from the highway fund was lower than expected. And that's because the highway department wasn't using the vehicles as much. And that would be how they reimburse them for that. So that was the unusual activity, I guess, in that account.
Lynn, would you just say that again? I didn't understand that.
Oh, hold on 1 second.
And while she's going through this, I point out everyone got these spreadsheets and documents in their county email. So if anyone has any problem seeing them, you can open up your email and have a look as she goes through.
Keys, these are updated ones. I'm not sure, Amanda, did you have a chance to send them out to anybody?
I did not, but I will go ahead and forward them to the ledge right now. So you'll have them in your most recent email. Okay.
Yeah, these have been updated a little bit, Keith.
Okay, thank you.
So I guess all I was saying is I'm just trying to show on this spreadsheet at the top, you can see the 177,000, what we planned on using of the fund balance. We actually used 135,000. of their fund balance. And the main changes in this performance was due to, there were some revenue shortfalls, but some of them also have corresponding lower expenditures. So for instance, we didn't spend as much money on fuel and gasoline. They were way under budget. And hence we didn't get any reimbursement from other agencies that we sell fuel to. So they're kind of corresponding, right? You don't spend as much money and no one else pays us for it. So it washes itself. And then the other big short revenue account was the reimbursement that the DM fund receives from the D fund, which would be the highway fund, when they actually drive the vehicles. So since there was not a lot going on during the summer and in the spring because of COVID, there was not as much reimbursement from one fund to the other fund. But we still did buy some vehicles in this fund. So that's pretty much the performance is pretty much expected, I guess, is what I would say.
Okay, that's my confusion, was I didn't understand it. The D fund goes to the DM fund and they were less than they were projected for that reason.
Right, because, and then there's going to be, the lower expense in the highway fund because they didn't pay it to the DM fund. So that's
Yeah.
kind of the relationship between the two.
Okay, thanks.
If you want to click on the tab for the D fund, Amanda. So for the D fund, they actually had a better performance. We had expected using $350,000. And we actually added to the fund balance $1.2 million. So that's a swing of 1.6 million. And that mainly came from, if you look down below, our revenue is short in our CHIPS funding because we didn't spend it all, but we have corresponding savings in paving and machinery rental and salaries. So we were under budget in our expenditures by much more than we were under budget in our revenues. And what really happened was, even though we had done a paving plan, I think you all remember a lot of resolutions when Gary was filling in, and we had planned on doing a lot of road work. It really just didn't get done. It was probably too late in the year. And, Brian had said they weren't able to do it all. So that is why the performance looks so good. I mean, luckily we can roll over the CHIPS funding. It's still available to be spent this year. So it's no money lost to the county. It just didn't happen in 2020. So I do believe the resolution, I think that Brian either already accepted or it's maybe on the agenda this month or coming. I'm not sure which month. It is to accept quite a bit of CHIPS money to be able to do the work this year that we didn't do last year. And then clearly the salary savings that was from furloughs and the vacant positions that we held during the year. And the salt expenditure, I have that on there, also was under budget by about $101,000, which is good news because we have been exceeding our salt budget for a couple of years, and the new season that will start will be under the new bid that we have with Onondaga County. So hopefully we'll be seeing more savings there. Okay, if you could click on the A fund, Amanda. Okay, so here we had planned to use $954,000 of the fund balance. And we actually used $112,000 of the fund balance. Now, this gets a little bit tricky because what we also had was an unbudgeted expenditure for $1.4 million to pay for a legal liability that happened at the very beginning of 2020. And we also had to transfer a little bit of funds out to the capital projects. That was just some interest that was recorded in the A fund. That's a $68,000. So when you take that payment away, as if we didn't make that payment for that legal liability, we actually would have added $1.3 million to the fund balance. So I kind of wanted to show that because that's certainly not a normal operation that would happen. And it had nothing to do with our, the efforts we made during the year to save money. So we really ended up outperforming the budget by $2.3 million. Because not only would we have not have used any, so in the end, we still used $112,000, the fund balance, but we were almost able to completely cover that payment without it affecting our fund balance. So, the A fund is very hard for me to kind of tell you in a nutshell, let's say, what were the things that added to this performance. I could list 50 things, or I could list 100 things. So if you want to just scan down a little bit, Amanda, I've just tried to highlight some of the major things. Yeah, a little bit. There you go. The first thing obviously is the sales tax. The sales tax was actually over budget still by $461,000. So even though we were anticipating back in April and May, a devastating performance, things certainly turned around for ourselves and a lot of other upstate counties. So just to put some relevance to that, the sales tax that we recorded was $24,061,000. We had budgeted $23,600,000. And last year we had taken in $23,850,000. So we actually collected more tax than in 2019. On the spreadsheet there, we've listed a couple of accounts in the treasurer's department. Now those accounts were all short in their revenue. And some of those, that the unrealized gains and losses, that was something we started a budget for that's related to our investments. And at that time, the investments did not do as well. We actually had some losses. We also didn't get all of the unrated gambling that we had budgeted because obviously the casinos were not operating. Interest income was lower also due to the rates dropping. So there definitely were some shortages in revenue there. Down a little farther, we kind of just did an inquiry in Munis and pulled up all of the salaries in the A fund, and we were $1 million under budget. So that definitely would be, a correlation to the furloughs and the holding of all the vacancies that we did as a proactive measure during the year. IT had a significant, some savings in software. The health department had a large savings in their preschool program. Now that's just their expenditures. So their revenues are also under budget by probably about 50% of that amount too. But that was a savings because there was no transportation happening for many months, and we didn't end up having to pay the vendor when school was not in session in the spring. Some of the other big items on the bottom there, Medicaid, we were under budget by $700,000, and that is going to continue through I think at least September of 21. It might even be the whole year at this point. I haven't had a chance to follow up with everything that's passed in the new budget. We also were under budget in our safety net expenditures, and that's probably because of the evictions were not happening throughout the year. So we had some savings there. But we were significantly over budget in foster care. And a lot of that could be related to, the courts were closed for periods of time. Visitation was obviously not able to happen as normal. So some children probably, stayed in the institutions or placements that we had them in. Clearly we couldn't do the preventive programs at the normal levels. So that definitely was higher than expected. And there's usually, some cyclicalness to foster care expenditures and revenues anyhow. And usually when I'm having a high year of expenditures, the revenues are lower because it's usually allocated to us based on the previous year. So I would think that our revenue will go up some for 21, some of our allocations to help cover future foster care costs. But, as I said, there's, so many variations. I would say, most departments were under budget in their salaries and their contractuals. Clearly, that would be the expectation with the operations. Travel was way under for everybody. Mileage was way under for everybody. We didn't go anywhere. People were just staying home. I have submitted about $40,000 in FEMA claims, and I'm working on another one that's probably going to be another $40,000 or $50,000 easily. So those are not recorded in here at all. We're just going to record them, when we receive the cash. So we did have spendings net in the account. After the health department was able to take some expenditures for a grant, we had about $50,000 in COVID expenditures in the year end for 2020. So if you look at the accounts, but like I said, I'm optimistic to get all of that reimbursed. We also just started, just as an FYI, we've been working, I know Kathleen had talked about, I think in one of her committees, that we are working to bill for the vaccine right now. They just had some training actually today with some staff up at the hospital to train us on MedEnt. So we're hoping that will also bring in some significant revenue to help with some extra costs of some contractors that we've had to help staff at the clinics. Our own, current staff who work in their normal hours cannot claim that for FEMA. FEMA will only allow current staff if it's overtime. So it's a good thing that, we are trying to get this revenue for the vaccines to help to offset that. So again, some of that will flow into 21, even though some of the expenditures are in 20. A lot of this is kind of new to us and developing, as we're going. So, if you have any questions, overall, it was a better performance. The state, the federal aid coming through has resulted in, right now, we only have a 5% reduction in some claims that haven't been paid by the state, but we're also being told they're going to be fully paid. So their fiscal year just ended in March 31st. So we'll have to look through all the settlements that we've gotten in the last couple of months, which often takes us a while to get there since we've been working on closing the books from last year. But so no significant loss of revenue, and all the proposed cuts in the current governor's budget appear to be restored. In social services, they had quite a few of them. Funding streams are going to be reduced, and they aren't anymore. They're being put back to the level, and we'll probably actually get more funding in some areas. But we haven't really gotten any administrative directives on those yet to see what our actual allocations are for our county and if they're going to be expanded, to what extent. So that's still kind of unknown right now. But if anybody has any questions.
So are there any questions before we move on to Mary Beth's presentation?
I just had one quick one, if that's okay.
Yeah, okay.
Lynn, on the report that I saw DSS family assistance, was that a reduced amount of revenue coming in for that, or what was the reasoning behind that?
That is, it would be below budget. The one thing that complicates that account is actually, I have a /EAF that's also considered emergency aid for families for foster care children who qualify under that eligibility code, which really is income driven. So what happens is we can have these weird fluctuations in the types of kids that come into foster care, and that could actually decrease that. So, our TANF families are reimbursed at 100%. So if you're on public assistance and you're a family, that is still reimbursed at 100%. So even if it's lower, the expenditure could have also been lower. Like I said, I certainly didn't list every account on here, but that revenue is still there at 100% for them. But the emergency aid, this federal aid for these foster care children, that is limited. So we do have a substantial local share, obviously, for foster care.
Thanks.
Yeah.
I think Mr. Lattimore has a question.
Lynn, nice report. In the paper, it's been reported that the school district's going up 3 or 4%. The city of Auburn's going up 3 or 4%. With these numbers being in the black, hopefully we can hold our any tax increase coming up. You feel that we have enough surplus and enough income from this to level off and not have a tax increase?
I haven't looked at what's coming up in the future, but I would hope that, the good news of the federal aid coming is certainly helping us in this current year state budget. But, it's hard to predict beyond that. Um, you know, this influx of federal dollars will not continue. So I think we, have to be cautious of just, spending too much, and just counting on federal funds that could be a one-time shot. But, I think I'm very happily pleased with the performance of last year. And I think, it wasn't easy on the legislature or the departments to go without for so many months. But I think that, that's one of the reasons that we're having a better performance. And, I think they should all be, recognized for doing that, they really did go without. And, it's a good effort by all.
You said that IT came in because software buys. I mean, we did go out and got better pricing. I think $500,000 worth of less in the copier division.
We did. I mean, most of that is charged to departments. I mean, I think, that's, him being under budget than what was budgeted. And clearly, I think we had to do the budget, before he'd actually been here for very long. So, I mean, that could have been an inflated budget number. I mean, I don't know, but having the turnover in that department, I think Paul has made an effort to, really look at what we're buying and not just purchase things that we had in the past if we're really not using them. And he certainly has gotten some cheaper prices on some things that we have needed. So again, I think that was a good effort on his part to not just spend what was there, but to really, try and only buy what we really need and, get some good competitive prices on the stuff that we do need.
Thank you.
Yep.
So any other questions before we move on?
Yeah, Keith, it's Tucker. I got a quick one. I guess this is going to be part of a bigger conversation. I hope we have. The budget is reflecting a lot of different departments that we did, in fact, save money in areas due to COVID. And I'm curious as to what's going to happen or what conversations might be happening at the department level. As to, are we going to go back to the way things were, or are we going to use some of these newer methods of doing business to continue to save money?
I guess, that's something to think about, Tucker. I mean, I don't know if we really, the traveling and things like that is probably where we saved money. But that would be really from conferences that were probably canceled. It'll be interesting to see if that's, if they pick back up. But I don't know that we changed a lot of other things. I mean, we've been luckily, the regulations have been changed for public assistance so that they haven't had to have face-to-face meetings. It's just to be seen what the going forward regulations will be, if it'll be a hybrid of how it used to be and how it is now. I think there's a lot more happening on the phone. So I think, we need to look at that, and we probably need to look at, staffing patterns and make sure that, if things are going to continue to be from remote or what the mix should be. I mean, I think, I work in the building most of the time, and there's other people who work out of the building a lot of the time. And I think there are definitely downfalls to not having interactions more. So whether a hybrid model is going to be the new thing, I think there's a lot to talk about that, and about the space that people need. That might solve some space issues that we have in the county also. So that's going to be things to consider when we do an assessment of our buildings going forward. What type of, the old fashioned idea that everybody has to have a desk, even though if we're going to let people work from home, they aren't going to ever hardly be there. I mean, we can rethink things like that about shared space and shared workspaces and stuff. So I think there's a lot to think about, that we found that we can work from home better than we thought. So yeah, I don't know.
Thanks.
Lynn, was there instances that some of the home visiting and those kind of expenses, car, Vaseline, all of those things were suspended for a period of time? So some of the visiting staff were not on the road like normal?
Yes, absolutely. I mean, we have very little uses of gas on the cars and stuff. I think, obviously emergency visits were being made, but people were doing a lot of visits by video. That was allowed. It was authorized, I believe, by OCFS to let that happen. But again, I think a lot of people think that we need to go back to doing more in home so you can see more of what's going on in the home, the peripheral activities. But it's also nice to be like, you could do that if you want to just check in with a family who's in crisis. It could be a little more personal than a phone call. So, there is a place for it for sure that we never would have done. So I think the staff are kind of still, discussing amongst themselves what's going to be the right mix and what will be allowed. Like I said, they may change the regulations back in another year or so once, hopefully this passes and it's not even an issue anymore. I don't know that they'll keep it this way.
If
Good.
I
Thank you.
could, just as a follow-up to Tucker's comment on question, you touched on, Lynn, DSS, for instance. Most of DSS is back in the building. We have a section of caseworkers that are operating on shifts, 1 week versus another week, on and off. Other than that, that staff is back. And currently the other departments are still sort of adjusting. A lot of them have brought people back. There are some people that are still operating from home. So that is a discussion that we will be having with the department heads. We're obviously monitoring the numbers carefully and, trying to improve our vaccination rate so we can kind of see how we're gonna fall out and how we're gonna land with COVID in general. So, so far so good here in our buildings. So just to give you an update.
Okay, thank you. So I think the next part of this presentation is if we're there, did you have anything to add, Lynn, before we move on to read that?
No, I'm good. That's good. Thank you.
Thank you very much. So I think the next part of the presentation is Mary Beth Reasons. So if I may ask Mary Beth if you may take over.
Sure. Good evening, everybody. If we can switch over to that fund balance and reserves spreadsheet.
Which page would you like me to start on, A, D, or DM?
I'll start with DM, kind of follow Lynn's methodology here because DM's a little easier.
Hey, Amanda. Amanda,
Yes.
can you blow up the spreadsheet so you can see? Anything?
It's Brittany is the one controlling the spreadsheets.
Keep going.
Bottom right corner.
It's bottom right corner, Brittany.
Is that any better, or do I need to keep going in?
I think we need to move on to this, the spreadsheet. Though. I think we're at the DM fund balance sheet, are we?
Right. I'm still seeing the year-end report. You gotta have the other.
Oh, okay. That's probably right. So I gotta stop the sharing and redo it. Okay, give me 1 second.
Nope.
Nope, this one. That's probably why I was zooming in and no one was seeing it. Does this work?
Yeah, that's
Perfect.
wonderful. Thank you.
Great. Thank you so much. So I kind of tried to highlight so it would be easy to see here. The balance of 671,562 was what we ended at last year. Basically, we have to flush out the prior year and current year encumbrances and the changes in what we're using out of the fund balance in our budget. As Lynn mentioned, this fund actually showed a loss of 135,000. So encumbrances are up significantly. It's trucks that are in the encumbrances, and I believe we've taken delivery of most of those at this point. So all in all, that's bringing our fund balance down in the DM fund fairly significantly. I've spoken to Brian about this a little bit. We actually are going to be working on our practice as far as how we calculate the chargeback between D and DM to have a consistent policy. I've spoken to some other counties and we're working on that. And we're also, he recognizes the importance of using our own equipment and our own people to do the work. And that's how we get that chargeback going over to the DM fund. So I think you'll see this turn around in the coming years. So that's how we end up in that number in the blue is our ending fund balance number, 368, 379. And then I just highlighted in green the encumbrance number. Again, that number's up about 250,000 this year. And again, that's a truck. So DM is a little bit lower. If we switch over to D.
Mary Beth, just quickly, do we have a target that we hope to have in that fund balance that is that like we do with the A fund where, there's their range that we'd like, or is that just kind of whatever it is?
Well, I think that's part of the discussion that I've had with Brian is that he kind of, I think, has some thoughts about the age of some of our equipment. And so really what's going to become important and why it's so important to have a policy about how we're going to charge equipment rates is we need to have a good understanding of what equipment we own and what its remaining useful life is so that you can start to build a plan for equipment replacement. And I don't think that we currently, I could be wrong, but I don't believe we currently have that plan. So the goal of this fund is to get the fund balance high enough so you're able to buy the equipment you need. Does that answer the question?
And the money comes from, the revenue source comes from the D fund or from rental? How do you build the fund balance there?
So it's either from the D fund, the charges in between the two funds for the use of the equipment, or our fuel sales, which does not bring much money into there. So it's really you've really got to get that equipment rental to be where it needs to be.
Renting from our own fund, right? Sort of.
Yeah, only in governmental accounting.
That's right.
Okay, so if we go over to the D fund, it looks much prettier. So in the D fund, again, the yellow is where we ended last year. So we ended at 1,018,000. This year, our encumbrances, last year at the end of the year, we did have to encumber some payments to the towns, which is why that number was high. This year we were on schedule with everything. So the current year encumbrances are pretty low. And then obviously the fluctuation between what we appropriated for in the 20 budget versus 21 isn't really much different. So really the big driver here is the net income that we generated in the D fund this year. Again, I've spoken to Brian about this. Those monies really, our paving was under budget and they really probably are going to get spent. We're probably going to spend our budget this year according to what I've talked to Brian about. So I don't anticipate that you would see that kind of income going forward. But obviously a super healthy fund balance. And then it just becomes that discussion of how much do we really end up moving over to DM for equipment purchases in the future. And then again, highlighting the encumbrances in green. That's where I would kind of anticipate that for most years, our encumbrances will be in this fund. Any questions on D? Okay, so we'll go to A fund. And like Lynn said, this one is so much more complicated. So for consistency purposes, we started at 18,164,000 at the beginning of the year. Again, the change in encumbrances was about 200,000. This fund has reserves, so you'll see the transfers in between reserves, money that we took out and money that we put in. most of the money that we're putting into reserves is interest. The change in what we appropriated for between the 2 years of budget. We broke out the budget performance to kind of segregate that 1.4 million. So the net of those last two numbers is the $112,000 use of fund balance, which brings us down to the 18,505,000. In the A fund, we have several reserves set up. So I added a column for prior year just so you could kind of see the fluctuation between accounts. I mean, the biggest, we did use building repair during 2020, so that's probably the biggest swing that you'll see there. We've used some of those funds. The reserve for building capital and the reserve for highway repair, both of those just changed by interest. Emerson Park, Trish, I know you had asked the question if that is designated for any particular project at this point. I am not aware of any specific project that's designated for. Sterling Nature Center, we've pretty much used that for projects that have been ongoing. There's just a little bit left there. Same thing with pavilion building and parking lot maintenance. The parking lot maintenance was typically funded through rental, and at this point, I don't believe any of that's going on. So I don't think we're going to see an increase in that reserve. And the DWI I work with Lloyd, and if he goes over budget, we fund it through the reserve. And then down below, we are self-insured for unemployment. So that 585,000 is what we have in unemployment reserve at this point. And that's held in a separate cash account as a long-term investment. Again, encumbrances in green, that number's down about 200,000 from last year. A big thank you to Don. We worked really hard with departments to make sure that what we were carrying in encumbrances, which would be open POs at year end, was actually things that we were going to follow through and take delivery on. So he worked really hard with me to get that number to a good place. So questions on the A fund?
So just for clarification, we haven't used the fund balance that we budgeted for a number of years, except this year we used, you're saying 112,000 of it because of that
Correct.
loss issue we had. Other years we've just contributed, even though we budgeted to use it, we haven't used it. That's how
Correct.
this makes out.
Mm-hmm.
And we still are ending up with just over 18 million in fund balance.
Correct.
21.
Yep.
Okay.
Okay, do we have any other questions? If there are none in chambers, is anyone joining us online have any questions?
I had a question, in terms of the Emerson Park improvements, those reserves, the pavilion and the parking lot maintenance it sounds like that's also for Emerson Park. What is the process for accessing these funds for, say, match on projects or for, there's a lot of stuff happening with park planning right now, and how does it take 2/3 vote, or what's that process look like?
I would have to defer to Chris, but I would guess 2/3.
The 2/3 requirement doesn't involve those particular reserves. However, each type of reserve is set by state law. So the procedure may differ depending on which one you're talking about, Trish.
Okay.
And
Do not.
I can go back and I have the resolutions that initially created those, so I can pull those out and look at what we did when we created them.
Yeah, I would love to know more a little bit about those funds and how they can be used and how we go about using them as we're moving into this public phase for the programming plan and some of the improvements on Deauville Island that are being discussed. it would be good to know where those reserves stand, you know, in terms of use of, for match and stuff like that. And do they have to be used for capital projects specifically, or could they be used to offset, for instance, the revenue losses from the no parking fees, things like that?
My guess is that the funding that we would get from federal aid, we could use for the lost revenue. That would probably be a nice place to charge that. But I definitely will pull the resolution to see exactly what it says about what it's supposed to be used for.
And if I may point out, in every case, that the process is that the director of whatever area it is comes forward with a plan to expend the funds that goes through committee. The funds are discussed and they come forward through the legislature. Now, as Chris said, there are different requirements for different funds based upon whether or not I can't remember what the term is, the funds that are.
Capital repair.
Yeah, and but there's some that are are by law established, and some that are by law not established, they're discretionary.
Let's do.
So all this stuff makes a difference, but in every case, it goes through the department and the appropriate committees to the legislature. Okay, are there other questions? Okay, great. Maeva, thank you very much. Do you have anything else to add?
No, I'm all set. Thank you so much.
Thank you very much. Wait, one more question from Mr. Lattimore.
Mary Beth, I know a couple of years ago, we got our bond rating improved, and with the surpluses that we have now, is there any higher rating we can get?
I think it would be, I believe there is one step higher, but I don't know that we would be able to achieve it. I'm not sure. You know, I think as we start doing this capital plan, we're going to have to really give some thought to our bond rating and the debt we currently hold and how that's all going to package together.
Thank you very much.
Thank you.
Back to our agenda. Well, this is our agenda, but back to the regular agenda. So the first up is Kelly Anderson. Kelly, are you on?
I am. Can you hear me?
I can't hear you.
You can't? No?
Yes. Sorry. It's can. Yes.
Okay. Okay. So I have a few things I wanted to review this evening. We are approaching May 1st, which is kind of the last time during the year that our office and the assessors can make any changes to the upcoming assessment rules. So that's happening countywide. We're very busy finalizing, entering exemptions, and updating assessment information in all of our towns. We also have a reassessment project that I've mentioned in previous months happening in Springport. So when we mailed the notices out regarding that project, of course, that triggered a lot of phone calls with people who wanted to meet with their assessor, understand the process, and understand their new values. So our office has been scheduling people from Springport to meet with their assessor, and we've been doing that for the last month or so and wrapping that up this week. We've also completed all of the review and entry of the assessment work that we're responsible in the 4 towns that the county does assessment work for. Next month will be grievance in all of our towns, or Board of Assessment review. And one of my responsibilities is making sure that all of the Board of Assessment review members receive training when they're required to receive it. We're going to be doing that online this year, and I've sent out those notices to all of the towns. So that is underway. We also have our village taxes sending in their tax levy information to me to generate their bills next month, so that those go out in line with their normal fiscal cycle. So like I said, we're very busy. We also have kind of analyzing and reviewing our staffing levels as well as the assessment contracts that we have. So for some of the members of the legislature who don't have the benefit of the history, I'll kind of recap it quickly. we started doing assessment services through our office, which is assessment services are a town function. And the only way that they cease being a town function is when we enter into a shared services agreement between a town and the county to provide those services. So currently we have 4 towns that fit that situation. And we are actually going to be letting go of one of those towns. The first town that we started with was Niles in 2016, early in the year. Later that year, Moravia joined on. And then in 2018, Springport contacted the county about helping them not only with assessment services, but about doing a full reassessment. So in the last 5 years, we've completed 2 full townwide reassessment projects and provided other assessment services in 2 towns. Each of those contracts has generated revenue to the county, and it has resulted in 1 additional staff person being hired when we really should have looked at hiring up to 1.5 or 2 additional people. What we've learned is that the first 3 towns cover the equivalent of the salary and benefits of 1 employee. The 4th town that we took on, like I said, was Owasco, and they really need their own full-time dedicated assessor at this point. The town is in agreement with that, and they're in the process of looking for someone to cover those services. I think most of you know that Owasco is also in real need of a reassessment project. It's been many, many years, and we just don't have the resources to take that on in our department. So consequently, I also have a new employee that we hired last fall that will be leaving us and has decided that this is not something she wants to continue doing. It's been, excuse me, very stressful. It's a difficult position to hire for, in that you really are the face of all assessment things, meaning your phone can ring and you have to take the phone call from any single person that lives in those towns. So having 4 of those towns for our staff to handle is quite a bit. So we've reached the point where we have a vacancy coming up and a critical position in the office, and we have 1 town that is going to go seek their own assessor. So, you know, that was a lot to run through, but I tried to sum it up the best that I could.
Very good. So before we do the resolutions, that relate to real property, does anyone have any questions? Okay, so there are none in chambers. So anyone have any questions online?
I did have one question. Kelly, hi. Could you just talk a little bit about the omitted taxes and what exactly that entails and what that picture looks like for this year?
I'm sorry, I didn't hear.
I can't.
Can you repeat the question, Kelly?
Trish wanted to know, wanted me to talk about omitted taxes. So I can't speak to them specifically, but I can talk about the process because I don't have a final list to review. But every year, one of our responsibilities under real property tax law is to calculate the total of exemptions that a new property owner received as a benefit that was intended for the prior owner. So every time a piece of property transfers that has a real property tax exemption on it, perhaps a veteran's exemption, an ag exemption, or a star exemption, the new owner of that property has to apply for it. And if that sale occurs after March 1st of a year and a new tax bill is issued, it's going to have the exemption meant for the prior owner. So the new owner has to pay that back under the law. So it's our responsibility to calculate all of those figures and apply them to next year's assessment roll so that when the tax bills go out in September for school or January for town county, there is a charge back to the new owners for the benefit they received they were not legally entitled to.
Thank you. Does
Thank
that
you.
answer? Great.
Yep.
Okay. If there are no other questions, let's move depending on how you count or how you consider what resolution is what. I think that there are 3 resolutions that touch on the real property. Those would be Ways and Means 2, 3, and 4. The Ways and Means.
I think I have 1 and 4. 2 and 3 I think are Jim's.
Okay, in that case, 1 and 4. Thank you.
You're welcome.
Okay. We have a move and a second for 1 and 4. Is there any discussion? Okay, all in favor?
Aye.
Okay, any opposed? Okay, so 1 and 4 pass. Thank you very much. Thank you, Kelly. Do you have anything to add?
Thank you.
Okay,
No,
great.
thank you for your patience.
Oh, no, it's very, very, very good, very interesting. Thank you. So, I think the next is on the agenda is Mr. Orman. Is that right? We don't have the.
Yes, sir. How are you? In my report, you've already gotten one of the main parts, and that was Mary Beth and Lynn, who presented what I thought was one of the most detailed descriptions that I've seen of a financial summary of the county since I've been here. The other two things, the county finance department, I think we've moved fairly quickly on certain issues. One of them was major, was describing or getting a job description of the finance director for the new department. And I have to preface it by saying that formulating a new department is not a quick or easy process. And you have to detail every single step of the way. And I like to think we've done that. Having said that, we forwarded a job description for the finance director to civil service. And this afternoon, the Civil Service Commission met. And if they pass it, if they approve of it, it'll go on to New York State for certification, which means at any point, at any point in time, we can begin to certify a new finance director provisionally. Lisa, Lisa, are you on?
Oop.
Hello? Okay. Lisa was at the meeting. She'll get back to us if our commission approved it. Hopefully they will. And then we will keep you advised of all of that. And the other thing was, just a point of interest, when Mary Beth came on, she discovered that 1099s hadn't been filed timely for the 2017-18 tax years. We received a notice from the IRS that the county would be paying $40,000 in a penalty for the 17s and around $37,000 for the 18s. And she got into this like she usually does and got involved with the IRS, and she got the penalties waived, both of them, which is substantial. Since then, she's worked very hard with the new software and the current filings, and we hope going forward, this issue will not surface again. So I'm happy to report that. And that's it. So any questions?
Anyone have any questions?
Sorry, I just, thanks a lot for the work you're doing on this, Jim. Appreciate it.
Yep.
And if the commission approves the job description, what is the
Yes.
step to create the department? Is that come second to that? And is
Not really. We can go ahead and do it. And at any point in time, appoint, and Lisa knows all the nuances of this, but I believe it's appoint a provisional department head, because we hopefully will have a position that's exempt or non-competitive. Either way, we get to fill it. It doesn't have to go through a testing.
where does the department come from? Is that the de facto treasurer's office, or does a new department have to be created and staffed?
Well, actually, it's the current accounting department within, or accounting positions within the treasurer's department. It just merely would be called finance department, and it would move out of, in the table of organization in the county, it would move out of the treasurer's department, out of the treasurer's responsibilities into its own department. So it would work hand in hand with the treasurer as it does now. It simply would be its own department reporting to ultimately the legislature. So I don't know if does that answer your question or?
I'm not totally clear, but I'm sure I'll get clearer as we go on. It's just, I was wondering where the staff of this department would come from. But yes, I'm not totally clear, but that.
No, I can expand on that. The staff would be the current accounting division and payroll division within the treasurer's office at this point. And it would simply be out of the treasurer's office and become its own finance department.
Okay.
So it would be ultimately the same people, and that would be the beginning of it. Now, this is not a process that'll happen within probably a year, 2 years. We had this discussion today at the finance committee's meeting, and Keith is certainly up to speed on it too, and Ryan. We talked about this a lot today, and it's not, you don't form a department overnight. So we're taking those steps necessary. First, we get the head of the department, then we get the department. But it's going to be ready pretty quick to be its own department, and it becomes a legislative decision to do that. Yeah. So that's all within the purview of the current legislature to do that.
Out of order. If I may suggest, this is very hard to explain in words.
You've noticed.
The presentation, presentational kind of layout chart for discussion, and that's what will answer Elaine's question. When you see the diagrams that Jim and Mary Beth and others have put together, it's pretty simple and it's pretty clear. To explain it is complicated, so let's
not try. Okay.
1,000 words, as someone said sometime, I don't know, but so. Mr. Adams.
Keith, it's moving along well. Just don't ask me to explain it.
Exactly. Mr. Lattimore does it.
I think by our charter, we're supposed to have a treasurer. Is that correct? So in the organizational chart, there will be a treasurer? Or are we going to rep change?
No, there does have to be a treasurer.
Does have to be.
Unless you have a charter. Good.
So I think Trish Kerr has a question. Trish?
Yeah, thanks. Hi, Jim.
Hi there.
Thank you for the update. I'm excited to see this kind of move forward. And one of my questions is, with regard to staffing of that department, is the idea to start with the treasurer's accounting and payroll staff, and then there's a lot of other accounting type positions throughout county government? How will they interface with the finance department?
Mary Beth has spent the last 2 years reaching out to people that deal with the financial areas of their departments. And she's been grooming towards this particular moment in time. And all those efforts are starting to pay off. She's developed great networking with all of those people. And usually, well, we haven't done it before here, but what I foresee happening is this is going to be, it goes back to what Keith said in our meeting today. When you took over as treasurer, how did you do it? Well, it didn't take 6 months. It took a few years. We got into what fits where, and we'll see what develops next. Right now, more than I had back then, we have a great foundation. I mean, we got really good people. So it'll be seeing what happens in the next few years. But right now, we've got the foundation to form the department. And yes, some people will be playing a heavier role, and we'll be networking with them. So yeah, and eventually there'll be the efficiencies of having all these people under one. If it's not one roof, it'll be one department. So we're kind of going through that process now, but we've been moving fairly quickly to get the plan in order. So yeah, I'm kind of excited about it, actually. I'm fairly confident. got the right people in place, and then we move forward. So,
And one last question, does that include the purchasing position? Does that get folded into finance or has that?
well, right now, we're looking at the purchasing position as being a lateral position on the same level in the whole table of organization as finance department and other departments. That's what we're looking at right now. And actually today this week we took a big first step and brought a person that will be stationed into our office working in the finance department, Lori Bradkey. And we're working that all out with civil service. Aileen has been gracious enough to talk with Lori about it. We've talked with her, and she'll be a welcome addition because she performs a lot of the functions. We have a space for her and we're all set to go. So it's this big step forward, and it's as much to show the legislature that we're serious, we're moving forward, and see where we go. So, yep.
Okay, great. Thank you very much.
Yeah, no problem.
I think the treasurer's office has a couple of resolutions here.
I do.
2 and 3. One is
Yep.
the resolution in the contract with on Spino, McLeod.
Yes.
Real property tax law, and the other is to authorize to sign the contract with Vanguard Research for title services.
It is.
We have a motion and a second. Is there any discussion? Okay, great. All in favor? Aye. Any opposed? Thank you very much.
Thank you.
Now, I think the next report is it Lisa? Yes, is Human Resource. Lisa Lippold, are you on? Okay, we have Lisa's report. Are there any questions that I can relate to her?
Shoot, come on. Can you hear me now?
Oh, okay, yes.
Yep.
Okay, just to give you an update regarding the commissioners meeting, after it's been decided that it's going to go forward as a non-competitive policymaking position. And other than some tweaking on the language for clarification for the commissioners, everything is all set with that position to move forward. So we're just gonna just tweak the language in the requirements, but it's just that to make it easier for the commissioners when it comes to clarification of the accounting people versus those that have finance, public administration, and business backgrounds, that they'll be the ones that will be required to have the 24 credit hours, whereas someone who has an accounting degree would not require the 24 hours because that's part of the master's or bachelor's position as it is. Just for that clarification for the finance piece that Jim was talking about a few minutes ago. So to then go on to my report, it's pretty cut and dry as to the amount of transactions we are doing. We've been moving forward with still doing exams within the COVID policies and procedures. And you can see, the kind of transactions we do, quite a few for schools and towns. The next section has blue for the 2020 for the March comparison and gray for the 2021 with the amount of individuals that have applied and been hired by the county, as well as the applications for the towns and villages. As to the increase in numbers that we are seeing in certain groups. And then, of course, what we've been up to as a department. Are there any questions regarding any of this?
Does anyone have any questions? If you're not in chambers, anyone have any questions online? Okay, hearing none. Great, thank you very much.
Okay, no problem. Thank you.
So our final report is John. Chomick, and I'm pretty sure John indicated he was out of town and probably couldn't join us, but let me make sure that's the case. So John's, of course, the county auditor. This will be his first year in that position. And I've asked him to submit to us quarterly reports. This is his quarterly report. As you can see, he's been involved, very busy, involved in lots of activity that is actually clarifying in some cases, in other cases, saving the county money. So I thought it was a very impressive report. If you haven't looked at it carefully, please go back and look at it, because as I say, this is a new position, and I think a position that is actually proving to be very valuable. Having said that, are there any questions on the report or anything that people want me to pass on to John? Ms. Lattimore.
Lynn's report said that the investment income was down. Who is advising us in regards to?
Well, that would be the treasurer's office, not this one. Let's see if there are any questions on John's report, and then we'll get back to that. Any questions on the auditor's report? Okay, so your question is advice on investment.
No, my question is, it was hard to lose money in the investment board this year, and I don't know who's advising us. I'd like to look into that.
Well, you got to remember that investment for counties, for government, is not investment for people.
I understand that. I understand
restrictions.
where we can and where we can't.
Right.
Thank you.
So you just want to report. So Jim, if you could give Mr. Lattimore a report, information on who advises us on investments, that'd be great.
Well, we didn't hit the mark. So, with our income.
Any other questions? Okay, then if we can, I think that's the last of the reports. We can move down on the agenda. I think that's it. The reports, I think we're ready for the. So I think we've handled all the ways and needs. So if I may call on Ms. Daly for Health and Human Services.
Sure. Health and Human Services had 7 resolutions this month. So 2 of them were filling of budgeted vacancies. A number of, one was accepting of the drinking water enhancement grant through the health department. 3 were renewals of contracts through Department of Social Services. So they were pretty much, I wouldn't say routine, but nothing out of the ordinary, and all were moved by the Health and Human Services Committee with no objection. So I would offer them up as a bundle unless someone would like me to separate one out.
Okay, we have a motion and a second. Anyone want anything separated? Any discussion? Favor? Any opposed? Very good. Thank you so much.
Yep.
Next, we have government operations, Mr. Foley.
Mr. Chair, Government Operations has 2 resolutions. I'll offer them up as a bundle unless anyone wants something without.
Second.
We have a motion and a second. Does anyone want anything separated? Any discussion? All in favor? Aye. Aye. Any opposed? They pass. Thank you. Public Works. Mr. Whip. Oh, wait, skip planning. Oh, God, I did this before.
Okay.
Forgive me. Planning.
Planning has 2 resolutions before you, would like to offer as a bundle. Foley, move them.
Second. We have motion and second. Any discussion on these 2? You're hearing none. All in favor? Aye.
Aye.
Any opposed? Okay, they carry.
Thanks for fitting me in.
Thank you for. Okay, now Public Works, Mr. Whitman.
Mr. Chair, Public Works has 7 resolutions. Do we need to single out the 2/3 one for Ways and Means?
No.
Okay, in that case, I would like to offer them as a bundle unless anyone would like them separated.
Move them. Thank you.
It's been moved. Second? Do we have a second?
I'll second it.
We have a second. Any discussion? All in favor?
Aye.
Very good, it passes. Thank you. Judicial and Public Safety, Mr. Vitale.
Last but not least, Judicial and Public Safety had 6 resolutions. One was added a little late, but it was for kind of filling a position that's very important that just came about being empty. And so I would like to bundle 1, 3, 4, 5, and 6 together. I think there's going to be more discussion on 2. So I'd like to get 1, 3, 4, 5, and 6 out of the way if anybody agrees.
Okay, we have a motion to bundle 1, 3, 4, 5, and 6. Can we have a second?
I'll second.
Okay, does anyone want any of these separated? Okay. Hearing nothing, I'm sorry, I should ask, does anyone have any discussion or comments on any of these? In that case, all in favor?
Aye.
Any opposed? Very good.
Okay, JP2 is to fill a full-time deputy chief and assistant district attorney position. Just put out there, we have a motion and a second, move forward.
I'll second.
We have a motion and a second. Okay, do we have discussion?
I have some budgetary questions. I don't know if you want to ask them now or after.
We can ask them now or after. It's up to you.
Okay. One of the clarifications that I'm looking for in this resolution is whether or not it's really reimbursement. So I've heard 2 different ideas surrounding that. One of which is that it's supposed to be a grant in the form of a reimbursement for expenses that were incurred roughly from the beginning of 2020 to early 2021. And it would apply to those. The justification for the resolution as written is that it can be applied to expenses that we are incurring now. And that would be in the form of this position that's for us. So, I would like clarification from anyone that can, clarify that.
Okay. Ms. Buderman can clarify that, please.
Thank you. So the position would be funded through the senior ADA position that would be is funded. The difference in salary would be approximately $8,467 for the full year, given that we'd be starting at a third of the way through the year. So the last 8 months, May through December, would be about $5,600. We have to come up with. That senior ADA position was vacant for the first 2 months of the year at least. Total of 14,700 salary, 4,300 fringe, roughly 19,000 savings. So it's already money in our budget. We also had the law associate position, which was 14,493 less than the ADA. So as of April 9th, that became the ADA, but savings to the department was already 4,000. So there's enough money there. The discovery grant from the Manhattan DA's office through the Office of Criminal Justice is $242,000. It's for last year's state budget year, so April 1 of 2020 through March 31 of 2021. It's for expenses we had, and we had more than the $242,000 allocated. It will be coming to the county once we finalize all of this. Check next year's funds. We did that write off against our expenses, which again would exceed that we can write off to the grant. But so we should be getting $242,000 to the county. The majority of that, we had $32,050 would be going to 911 to offset the cost of a position there. $20,700 would be going to I think the probation department to offset the pretrial release. And then for last year, it'd be $189,347 would go to the DA's office budget. Next year, we'll have to set up a collaborative plan like we did this year to use the money. But again, the idea is that the preference is to fund the discovery laws. So the money is already in our budget, but certainly the $242,000 should make everyone feel a lot easier. I would note that I was looking at the budget tonight, and our spending was down 32,000 from 2020, and our revenue was up 6,000, so there's 38,000 less the taxpayers are ready, and now we're gonna get 242,000, of which bulk is gonna come to us.
Thank you.
Understand.
Ms. Vitale?
Yeah, there a number of things. Mr. Blumen keeps referring to revenue and expenses from 2020. We can't spend last year's money, this year's budget. Right now, the DA's office is fully staffed. And I personally haven't seen the kind of the budget numbers to the current date, but with it being fully staffed, I don't really believe that the money is in this year's budget to support this at this time. I don't know if we're better off to table this until we get a refined report from Lynn to see if the money is there or not, or if we should make an amendment to the resolution to take the money from contingency. This is not for Ways and Means to determine this position at this time. It went through judicial and public safety. It was passed in judicial and public safety. Our responsibility at this point is the money. And the other concern I have is, and John just alluded to it, what will happen in 2022? And for me, this looks more like we're growing government, and I don't think that's really what we want to be doing right now. But if nothing else, I would make a motion right now to amend the resolution to take the money from contingency. And I would say that the amount from contingency would be the amount of the salary. And that way we know that the money is there, and if people want to support this, we can support it. And if not, then we can go from there.
Is that a formal?
That's a motion, yeah.
In that case, we have a motion to amend the resolution to calling for the funds to come from contingency. Do we have a second? Hearing none. Yeah.
Right.
Chris.
Oh, Chris, sorry.
Yeah, so I would just, if I may, Mr. Chair, Mr. Vitale, would you feel more comfortable if we were to be more specific in the resolution as to where we were drawing the funds from? Would you be able to consider that if in the resolution we said we're taking it from, not necessarily from contingency, but from this fund or whatever, and it were more explanation given as to where we're gonna find plus or minus $10,000 for this year alone. Your point is taken regarding next year. We can address that for 2022's budget, but for this period moving forward from now till the end of 21, would that help you to arrive at the conclusion to support it if we were able to determine exactly where that money was coming from for that specific period of time?
Yeah, I'll answer that. That probably won't get me to support it this time, but I think that is our responsibility to make sure that the funds are actually there. And that's why I kind of made the comment that maybe we need to table and get a report from Lynn or whoever to make sure that the funds are in the accounts that we're going to be drawing them from.
So I think I understand what Glenn's saying. just want to, clarify. Because what John is saying is that savings from his office are part of the reason why this should be funded. But those savings were accounted for in the 2020 budget, early 2021. And they're kind of sitting there, and usually at the end of the year, what happens is they get swept. If they're not spending on that salary line, right? So we're saying that can't really be a justification to close that gap of $8,000 to $10,000. Okay, so the other justifications that are in the resolution are the ticket program, which that money is already allocated, as I understand it, towards other expenses. And then this grant that's referenced that we have not actually received yet. And it's for reimbursements. It's for last year money that we spent. That's where I'm kind of getting hung up. And if anyone can clarify these points, I guess, this is the financials of the position that's being requested and it's in front of us, that's kind of where I'm at.
Yeah, I think Mr. Lattimore, let's legislators first.
I just wanted to say that, it's a moving target. The governor keeps coming out with these mandates, people are walking on the street from prison and and the courts have had to shut down because of the pandemic, and now they're open again, and it's going to be a rush to judgment here if we don't have the personnel in line to help adjudicate these cases. I mean, it's a difficult time for law and order, and I'll be supporting law and order going forward.
Yeah, if I may clarify here, I did speak with our budget officer on this because I looked at that, and this resolution cannot be passed as it stands because it doesn't say where the money comes from. I understand what Mr. Buderman said, and that may be true, but that's not what the resolution says. Our job is to pass through stuff and say the money's going to come from here. As I spoke, it turns out, when I spoke with Ms. Marinelli about the situation, the numbers she shared with me were that if you look at the salary lines for the district attorney's office and you project what has been spent so far without this position, those lines are going to be over budget by about $50,000. They're over budget now, projected to be. So there is no money in those budgets. You can say, well, we didn't fill this, we say this, whatever, but the money, according to our budget officer and the projection of what's being done now, there will not be money. This is why it's got to come from somewhere. If people want to do this, then this is why we suggest that it has to come from contingency. Or if there are other alternatives, we can cut back on lunches and parking for the grand jury. We can cut back on law books. We can do all kinds of stuff. But if we're going to find that about the money in the resolution, then we do need to table it. We've got those two choices. As it stands now, there is not money to cover this position.
Very dramatic, but agree.
But it's true. It's not dramatic, it's the fact.
Because you heard them last week.
This is Elaine. I guess the thing at committee, and again, I didn't even speak to whether or not a new administrative title is needed for the district attorney, but I took issue, again, similar to this, with what wasn't making sense to me is the resolution is alluding to increasing or upgrading a position, increasing the salary. It references a discovery amount of money that could potentially offset that increase, yet the discovery money has not been awarded or accepted into the budget. And then I was under the understanding that there was a direct ask without the acceptance of additional discovery money into the budget. Could the budget currently support the upgrade throughout the rest of the year? And I thought the answer was currently no. It couldn't be supported based on the assessment that was done, so that at some point you either come back and say, I'd like to accomplish this and I need this much money in the line to do it. And then we vote on that. But to me, it's just the way the resolution is written now that is going to be difficult to pass in this form.
Thank you.
I'd like to make a motion to table this.
Second.
Okay, we have a motion to table and a second.
Who was the second?
Mr.
Design.
Peters.
Thanks. If we could just state names with the seconds, that'd be great.
Say your name.
He's clever. So Mr. Pinckney moved, Mr. Keith second. Now Mr. Foley has a comment.
Point of clarification, where is it being tabled to next month's?
To here, please. Okay, so we have a motion to table to next month's Ways and Means.
Just, can I have
Could I
a
be called?
clarification? I'm comfortable with that, but I just want to, I'm asking for a friend, that any legislator can bring forth a resolution in writing at the full legislature. Is that correct?
That's what your rules of order say, yes.
I'm sorry.
That's what your rules of order say. The answer is yes.
What do we do if something's been tabled to committee? Does that override that?
No. No, I would say no, Mr. Batman. If it's tabled, it's no longer up for discussion here. We can bring it back next month that ways if you wanted to. But any legislator can bring a resolution at any time on the floor of the legislature. But it will not be part of the Ways and Means or Judicial and Public Safety Group. When you group those resolutions, it won't come with the endorsement of the committee. It'll just be a resolution brought by an individual.
At the end of the meeting, as a.
Yeah, once you're done with the committee
Okay,
resolution.
even if it's been tabled.
Yeah.
Okay, good, thank you. Although, not to be a stickler for rules, but you know me, Chris, what am I? What am I?
The
Rule follower.
I'm polite, so I'm gonna answer that with a rule follower.
Our rules say this, and I want to make this clear. Our rules say that the chair can get advice from anyone, but the chair is our parliamentarian. So we always ask our attorney, that's not what our rules say. He advises, the chair decides. So just so we know, but you might want to ask the chair.
Well played. Well played.
So, well, we have a motion on the floor. Mr. Buderman has a comment on the motion to table.
Thank you. The increased position, the salary would be approximately 87,1. The position that's being defunded to pay for it, the salary currently is 78,1. The difference is 8,467 a year. Again, we're talking about May 1, probably till the end of the year. So 8 months of that would be 5,644. That's the difference of money we're talking about. As I indicated, that senior ADA was vacant for 2 months, which saved 14,700 in salary and 43,300 in fringe, total of 19,000 savings. I showed another savings this year from the law associate. For the first April 9th, it became an ADA, but until then it was $4,000 less salary than was budgeted in our budget for this year. So the money is in our budget this year.
Well, let me
If you
throw
want
out,
to table-
some other numbers.
Oh, you just-
The position that you referenced was budgeted at 69,000, not 78. You hired, it was budgeted at 69, you hired at 78. So there is no savings there. That's been used. And that's fine. More importantly, our budget officer says that there's a $50,000 gap in your budget, your salary line. This is not numbers that, that you or I are going to argue about. The budget person, if you want to check with Lynn between now and whenever to get those numbers, but that's what our budget officer says.
We checked the numbers, the first I've heard of it. But the position was in the budget last year at this summer, same number, it's in the budget this year at that number. Current.
Yeah, I don't know. I just was going by what the on there said. The other thing, though, I want to point out is before we vote on the motion to table, there seems to be over time, there seems to have developed confusion about this idea of 1% or appropriate experience. The idea of that was, and hopefully we'll resolve that when we go through the non-bargaining starting salary stuff. But the idea of that 1% was this. If you have to offer someone who's qualified by experience education, and so on, for a position, you have to offer them more than the minimum. Then you can offer 1% more for every year of comparable experience. That was to allow to get people on board. And we've seen this has seemed to morph into people always get this money. That was never the intent. The second point with this, though, is this position is a position that, by definition, requires 5 years of experience. The resolution itself says preferred 6 to 7 years of experience. So it is absolutely inappropriate to say that someone who's been an attorney for 10 years, 5 years, whatever, is due that extra 1%. Because you have to have at least 5 years, preferably 7 years, in order to meet the minimum qualifications. The idea of that additional money is for above the minimum, not the minimum. So and I don't know who you have in mind, but it would have to be someone that has multiple years of experience. And the equivalent experience is not going to be as a lawyer. The equivalent experience is going to be at some senior level position. So we have to I mean, that's kind of for later, not with this resolution, but it does get at the heart of what we're doing here in terms of how much money it's going to cost and how we can move forward. So all things to keep in mind as we move forward, right, Mr. Peters? Question? Okay, question's been called on the table. Okay, all in favor of tabling?
Aye.
Any opposed?
Opposed.
I'm sorry, is that you, Tucker?
That was Beetlejuice.
Yep.
So one opposed, motion passes. Okay, is there any other business to come before this committee?
Yeah.
Hold on. Did you have another issue, Mr. Whitman?
Yeah, I do have another issue. It's an issue in our process. You know, we get resolutions that come to these bodies, and then, you know, there's hidden agendas, there's other issues, there's, you know, smoke and mirrors about what the real issue is. And we choose to kick the issue down the road further and hope it goes away. You know, if we're so confident in our argument that there's no money for a position and this should not be coming forward, then these things should be voted down, not kicked down the road to next month so we can argue about it further. I don't think any money is going to magically appear that supposedly doesn't exist between this month and next month. Just a lot of these processes are just a waste of time, in my opinion, but that's my uplifting comment for the evening. Thank you.
Yeah, point well taken, I think.
Mr. Chair, motion to adjourn.
We
Second by Tally.
So all in favor to adjourn?
Aye.
We're adjourned. Thank you.
I said, my interpretation.